Hi, imagine the following scenario. ETH 2.0 fails. It doesn't deliver on time. The gas fees, they don't get reduced as much as people promise. The crypto market grows quicker than Ethereum can increase its efficiency. It takes a really long time to move from proof of work to proof of stake. And people in the market, both developers as well as users, they're looking for alternatives. They're looking for competitors. And let's also assume in this scenario that everybody wants to make this switch as simple as possible. So the developers, they still want to use Solidity to program their smart contracts. The users, they still want to use MetaMask to interact with decentralized applications. Let's assume all this. And let's try, when we look at this scenario, to find out what could be the potential winner, what could be the potential competing layer 1 smart contract platform that might make the race. That's the question we try to answer in this video, and we're going to look at the cold hard facts. So we look at current price action, we look at inflation, we look at on-chain metrics such as bridge statistics, how much money has so far been moved from Ethereum to that competing layer 1. We're going to look at all of those things. And of course, we have to limit the scope of this video somewhat. And so what we're going to do is we will only look at the top 30 cryptocurrencies in terms of market cap. So that's what we are looking at. And if you're wondering what's the exact technical criteria that we're going to filter these layer 1 competitors with, it's EVM compatibility. So Ethereum virtual machine compatibility. If the blockchain allows for that, that means you can interact with it using MetaMask, and it also means that developers, they can still continue using Solidity. So here we go. Let's look at the ranking. Let's look at what competing layer 1 smart contract might take away some of that sweet market cap of Ethereum. So first of all, we've got the Binance Smart Chain that is EVM compatible. So that's one contender. Solana, unfortunately, is not. Cardano is not either. Same goes for Terra Luna and Polkadot. However, AVAX is, so AVAX can be used with MetaMask. Same for Polygon Matic, which does make sense, right? Polygon Matic is intended to simply be a scaling solution for Ethereum. Then we've got quite a few assets that are not smart contract platforms. Unfortunately, Algorand has its own platform, so does Near and Cosmos Atom. We also have to filter out Tron and Stellar, but Fantom is still within the scope of this video. So Fantom can be used with MetaMask. Fantom is EVM compatible. So why is all of this important? Because I personally don't think it will be very easy for all of those layer 1 competitors to attract a large crowd of both developers and users. Because imagine that future, right? Imagine you don't just have MetaMask for your EVM compatible blockchains, but you've also got the Fantom wallet for Solana, your ROI for Cardano, Terra Station for Terra Luna, Polkadot.gs for Polkadot, Na for the Near protocol, Kepler for Cosmos Atom, Tron Link for Tron, Rabbit for Stellar, right? This is a lot of different wallets without interoperability, a lot of different platforms for developers to learn. So these will be siloed, isolated platforms, unless they open up, right? Unless there is EVM compatibility. In the current state, at least, it is very hard to port a decentralized application from Ethereum to any of those platforms. And that's why when you look at dApps, right? When you look at Uniswap, for example, you can very quickly find the equivalent on EVM compatible blockchains, right? You've got PancakeSwap on Binance Chain, Trader Joe on Avalanche, SushiSwap for Polygon Matic, and of course, SpookySwap for Fantom. But the swap experience for those other competing layer 1 solutions, it is pretty different. These kind of applications have been written again from scratch. And so when you've got something that is successful on Ethereum, for example, Olympus DAO, right? Rebase tokens, but you don't want to pay those expensive Ethereum gas fees, you will very quickly find copycats or forks on those EVM compatible blockchains. And you will have to wait way longer for these applications to pop up on Solana, for example. So let's start with the bridge statistics. What does bridging mean? It basically means you send your Ethereum to a smart contract on the Ethereum blockchain, and then there's an equivalent contract on your competing layer 1 where you can then unlock that Ethereum in form of wrapped Ethereum within that competitor. So you're directly moving your funds from one blockchain to the other. And so let's first start out with BSC, right? Binance Smart Chain. Here, the number of daily unique depositors is actually pretty low. And I think this has something to do with BSC being mainly used by Binance users, right? They move their money rather from the centralized Binance to the somewhat less centralized Binance Smart Chain. But there's not so many people that move the funds from Ethereum to BSC. So that's the number of depositors. And here we've got the US dollar amount bridged using AnySwap. AnySwap is a platform that allows for a lot of different bridges. So not just Ethereum to BSC, but that's the dynamic, right? The number is very, very small. It's around 50 million. So BSC doesn't seem to be a direct competitor to Ethereum. It rather seems to be a vehicle to move funds away from a centralized platform to something that's somewhat less centralized. At least currently in practice, we don't see this move from the Ethereum platform to the Binance Smart Chain platform. Now, next we've got Avalanche. And here we've got the bridge statistics for Avalanche, number of unique depositors, way larger than the numbers for BSC, right? This is BSC, this is AVAX, very different level. And these are the bridge statistics. Very, very positive, a lot of momentum. And if you're wondering, why is this here turning around? This number is a US dollar number, right? And you have to consider that Ethereum and AVAX also went down in value, right? This peak here is from the beginning of December last year. And this is the price here of Ethereum during this time, right? We went down by 33% in Ethereum. And for AVAX, we went down by 31%. And so seeing this drop from 7 billion to 5 billion, a bit over 5 billion, isn't surprising at all. This is simply a price change of the underlying assets. That's not money being directly withdrawn from Avalanche. Let's also look at Polygon. So this is the Polygon trend. We went pretty much sideways in terms of the money being bridged. So a lot of initial hype, probably because of the rewards that were paid out to investors using DeFi applications on Polygon. Since that initial hype, there isn't that much action. Let's also directly compare this to AVAX, right? AVAX and Polygon are pretty similar in size right now, but the momentum is clearly with Avalanche right now. Let's also, for completeness sake, look at the number of depositors. This is Polygon. Same picture at the beginning, a lot of action. Now it's rather muted. Most days, AVAX has more unique depositors. Last but not least, let's also look at Fantom. That's the fourth of our competitors. A very impressive initial spike, and since then, a consolidation with a sideways movement in terms of value locked. Way smaller though than AVAX, right? Let's compare this. This is AVAX, this is Fantom. And again over here, AVAX versus Fantom. So this is number of depositors. So really now we went down from the top 30 crypto assets to basically 3 competing layer 1s because the Binance Smart Chain isn't really used for bridging money over. We've got AVAX, we've got Polygon, we've got Fantom. And that's the current market share, at least relative to one another, right? Fantom is at 12%, Avalanche at 41%, and Polygon at 47%. Note though, the momentum seems to currently be with AVAX. And so here we've got the market caps. AVAX is at around 23 billion, so it's at market rank 11. Polygon is at 18 billion, market rank 14. So even though more money is bridged on Polygon, it is cheaper in relative valuation to AVAX, probably because of that momentum. And then we've got Fantom with a market rank of 30 and a market cap of 6 billion. So approximately 1/3 of the size of Polygon, 3.5 times smaller than AVAX. And it's interesting how these numbers, they do pretty much align also with the total value locked over here. Not a lot of price distortion. So maybe TLV for comparable blockchains is a pretty good measure. So it does make sense to look at these statistics to potentially gauge where the overall market for layer 1 competitors is going. Now this channel focuses on technical analysis. So in the end, we actually want to know where's the price headed, right? What's the momentum of the price? And we don't like to use the US dollar chart that much because it is influenced by the overall crypto market quite a bit, right? When we just look at BNB, for example, we look at this top over here. This pretty much coincided with the same top here for Ethereum. Again, we switch back to BNB, bottoms over here, and at the same time, bottoms over here for Ethereum. So there is a lot of correlation between crypto assets. And so you really don't want to look at the US dollar chart. You really want to look at relative performance to one another, because that's how you can decide what cryptocurrency to invest in, right? You're looking for outperformance. You're not just looking for crypto exposure, because otherwise you could simply just buy Bitcoin. So this is now the BNB price divided by the Ethereum price. So the outperformance of BNB versus Ethereum. And we've already established not a lot of money is flowing from Ethereum to BNB. And so it does look like that maybe BNB isn't even a direct competitor to Ethereum. It's now the third largest cryptocurrency in terms of market cap. First is Bitcoin, then there's Ethereum, then there's BNB. But still not a lot of money is flowing from Ethereum to BNB. So maybe BNB stands on its own and it doesn't move that much anymore versus Ethereum. At least that's also how the relative pricing looks like. What's interesting to note also is that the circulating supply for BNB is at 100%. So there's no more inflation happening. And that's also the idea of Ethereum, right? That with every transaction, some of the gas that's being used, it also burns Ethereum. So in the end, Ethereum might even become deflationary. And so we've got pretty much two universes that might not actually compete that much, at least for capital, at least for money in and outflows. So maybe in the end, it wouldn't be completely unreasonable to assume that we will stay in this sideways trading range for quite a while going forward. The potential growth might be limited for BNB because it's already so large, and the price movements relative to Ethereum, they are not drastic at all, right? This is a very narrow trading range. A floor at around 20% negative and a top at around 22% positive. So if you want to, you could time this, right? You could buy over here, you could sell over here, but maybe that's not even worth your time, right? Trading this actively might not be the best opportunity in crypto. The chart of AVAX though looks very different. This is AVAX in US dollars, and of course the US dollar charts, they look pretty similar. But the relative valuation of AVAX to Ethereum, that's this chart over here. Very, very different. One might argue that we might have a certain resistance over here, right? We came up here, then we bled heavily versus Ethereum. This is a drop of 85% in half a year. And then we went up again all the way to this resistance. That's 570%. Or if we look at the bottom to today, 450% roughly in less than half a year. And so the question really is, can AVAX outgrow this over the long term? And I've been using the Avalanche ecosystem for quite a bit. And I do like it. It's not expensive to use. But the current major use cases for Avalanche are rebase token systems, or to be more precise, Time Wonderland. So that's a fork of Olympus DAO on Avalanche. It's the most traded token on Trader Joe. And there might be quite a bit of hype around Time Wonderland. It could be very much possible that people will withdraw their money from Time, simply because this additional inflation that hits the market all the time, it depresses the underlying token, right? But that's now going a bit on a tangent here. I simply think this growth of AVAX versus Ethereum, it is based on a relatively risky project. And so what we really want to look at is, will this positive momentum, this positive bridging statistics continue for Avalanche? And will there be more very successful decentralized applications that move from Ethereum to AVAX? Because if that's the case, then I could very much see this continue to outperform. Again, this is relative valuation to Ethereum. This does not imply that the US dollar price of AVAX goes up. If all of crypto is going down, then of course the US dollar valuation of AVAX will go down as well. I am, by the way, relatively bearish right now on the overall crypto market, but that's a topic for another video. You might also want to watch other videos on this channel that talk about Bitcoin, that talk about Ethereum, and the underlying data to find out how far this could potentially drop. But let's stick with the topic of the competing layer ones. Here we've got Polygon Matic, which is technically a layer 2, right? It's a scaling solution for Ethereum. But in the end, the usage of Polygon Matic is very similar to competing layer ones. You have to bridge over your money from Ethereum to Polygon, and then you continue using Polygon on MetaMask. There's really, in terms of both for the developer and the user, no difference to using Polygon Matic versus, say, AVAX or Fantom. And so here we've got the same kind of dynamic. We've got a resistance over here. We did have quite a bit of outperformance since beginning of the year. The question here is, can this continue to outperform? Because this really reflects, the sideways trading action really reflects what's also happening with the bridge statistics. It's actually very interesting when you look at this, right? This chart starts in May and then it went straight up. Here, this price appreciation also happened in April, May, and since then sideways. So I haven't used the Polygon ecosystem that much. I know there are some, You might call them failures for Polygon. So for example, there is OpenSea, right? The NFT trading platform, and especially trading NFTs is prohibitively expensive on Ethereum. So using Polygon for that would be pretty much the ideal use case. But Polygon NFTs haven't taken off at all. Less than 1% of the NFT trading volume is on Polygon because you really have to trade Polygon specific NFTs. You can't just trade Ethereum based NFTs. You can't just use your standard CryptoPunk or your standard Bored Ape and trade this. On Polygon, you have to use Ethereum for that. And so NFT trading wasn't taking off for Polygon. So to me, it's not yet clear what this new driver will be. There needs to be a new driver that helps to bring Polygon out of this stagnation. Polygon, by the way, is currently at 72% circulating of its total supply. AVAX doesn't have a max total supply. Last but not least, let's look at the relative valuation of Fantom to Ethereum. So this is the Fantom chart, very, very volatile. We've done quite a few trades on this channel with Fantom, and you really want to time this asset. Because if you don't, if you buy at the wrong time, you're in for a potential drop versus Ethereum of 79%. So this can be potentially ugly. And again, very interesting, a very similar price dynamic, very close to the all-time high versus Ethereum. So similar assets have similar price dynamics, at least in the recent past, which does make sense. What I like about Fantom is, first of all, the inflation isn't that high, right? We're already at 80% circulating supply, and the size of Fantom overall is still relatively low. The market cap isn't high at all. Of course, the bridge statistics, the dynamics of the bridge statistic isn't that great either. But once you start using the ecosystem, there are quite a few impressive things happening, especially in DeFi with, for example, Tomb Finance, also, of course, with Olympus DAO forks. And you can see quite a bit of dynamic. For example, the main decentralized exchange on Fantom, it has completely updated its layout. Quite a bit of a change recently. And here are some interesting usage statistics around Spooky Swap. So how much liquidity is locked up in the different liquidity pools? It's a very nice development, right? Again, why is this going down? That's because of all of crypto contracting, right? This is not necessarily withdrawals of liquidity. This is simply a 30%, 35% drop, and that's simply how much those underlying assets, they went down in price. Here we've got the trading volume. It's also going up into the right. Very, very nice. What's mostly traded? As said, Tomb of Tomb Finance. Of course, wrapped Fantom. T-Share is also closely related to Tomb. And then we've got the Boo token, which is native to Spooky Swap, and various stable coins. So if you are in DeFi, Fantom is definitely worth a look. It seems like this is where the current action is happening. The growth around Polygon might be stagnating somewhat, but full disclosure, I don't use the Polygon network that much. The momentum around AVAX and around Fantom does look very nice though. So this is where we are at. Unless there's a clear argument for Polygon's future growth, I think the best contenders for taking market share away from Ethereum is Fantom and Avalanche, at least when we look at the top 30 cryptocurrencies. That being said, this is a long-term view, right? This does not mean that Fantom, for example, can't temporarily go down versus Ethereum, say even 50%. Very much possible. This is simply what I think will be probably the most likely winners in case Ethereum doesn't succeed with their scaling projects. Adoption is happening, and it's happening fast. Money is directly, measurably moving from Ethereum to the competitors. So the clock is ticking for Ethereum. It's still the major smart contract platform, but if the team doesn't figure it out rather sooner than later, then maybe 2, 3, 4, 5 years from now, it will be rather an EVM compatible blockchain that makes the race. And that could very much be Fantom or Avalanche. And so the way I would approach this technically when investing is probably to simply bet on both, right? It's hard to say who's going to be the winner. And so you want to diversify at least somewhat. And so probably it might make sense to dollar cost average into both cryptocurrencies over the long term. Of course, no financial advice, right? And when all of crypto is going down, AVAX and Fantom are likely going to crash as well, right? There's inherent leverage in altcoins. They move more, they go down more than, for example, Bitcoin when all of momentum is bearish. But if your time horizon is long enough, and if your thesis is that Ethereum won't figure it out, that would be my bet, Fantom and AVAX. If you enjoyed this video, you're probably also going to like the content for the premium members. There's the Bitcoin Strategy Premium membership to be found at thebitcoinstrategy.com. Link is also in the video description. We've got daily market updates. We've got exclusive content around how to interpret price data, how to interpret blockchain data, how to construct a portfolio. And there's also a private chat where you can ask me any questions. By the way, the current price, it will increase by February. So if you lock in the price today, you won't be affected by that price hike. If you haven't yet, a like on this video would be appreciated as well. It will help the channel grow. And of course, feel free to subscribe. I publish videos regularly. Last but not least, there's also a public Telegram channel. You can find us simply by searching for Bitcoin Strategy Channel within the Telegram app. See you next time. Bye-bye.